Africa is not a monolith. It's not a unit of analysis. And I think for all of us up here, we're using Africa here as a shorthand, that they are, sub-Saharan Africa, if you use the World Bank lingo, which Kamal and I are used to doing, it's 47 countries, now 48. But I think that's a really important point, that every time we talk about Africa, it's really a simplistic notion. I think another issue that comes to mind in the area of governance and policy, there's no question that the reason that the economies of most African countries were so resilient during the financial and economic crisis starting in 2008, 2009 is because there were hard-won reforms that were put in place, particularly on the economic side and to some extent in the institutional and the governance side. We certainly see, although there are exceptions as there are in any continent, tremendous improvements in the electoral process across the continent. Are we there yet? Absolutely not. But I think, one cannot deny that there's a direct linkage between the policy making that has taken place and the economic growth that has engendered. It's not been commodity prices. It's not been simply the southern investors like the Chinese or the Indians making that difference. It's because of hard-won fights on the continent itself. Having said that, I think there still is a gross misperception about most African countries. I call it the continent of economic misperceptions, where risks in Africa generally are highly overstated and the investment opportunities are highly understated. That's not the case everywhere in the continent, but a vast majority of the countries, I think that's quite true. One of the things that has been happening, in part more because of southern investors like the Chinese, like the Brazilians, like the Indians, has been that Africa has begun to integrate internationally. And so there's more competition. They are entering, some of the African firms, by dint of southern trade and investment, are beginning to get involved in network trade. And this is engendering competition, more efficiency, climbing the value chain on the continent than otherwise would be the case. And as a result of this new investment, this new trade, this new integration internationally, as has been the case in other emerging markets over centuries, is that this is forcing African civil society, it's forcing African governments, it's forcing African consumers, African businesses to really come under pressure to figure out how are they going to compete even more so, not just with other regions of the world, but among themselves. And so what we're seeing in Africa is much like what I used to see when I was working intensively in China, is you're beginning to see competition among the states in terms of policies. Presidents, prime ministers like to hear of really good stories, robust stories of what worked, in a Tanzania. Gee, can that work, in a Ghana? And they are keeping an eye on each other. And I think that kind of competition is engendering, some degree of improvement in the governance and policy environment. I think, in the context of infrastructure, I think this question of regional integration is so paramount because, as we know, Africa as a continent is cursed by the fact that it is comprised of a large number of small countries. And when that happens, like in other regions of the world, we have to create synthetically large markets so that investors can, whether they're African or not, can yield economies of scale. And what that means is, in terms of the governance arena, particularly in infrastructure where you need to have these interconnections, is how to get the governments to work together so that they can, in tandem, attract the kinds of large-scale investments that investors are going to make because that's the way they make their returns. And I think, this issue of regional integration, with those of us who have been working in Africa for years have been harping on, I think is still the goal. I think it's a laudatory goal, but it's going to take a lot of effort on the part of Africans, on the part of the international community, and frankly, through public-private partnerships on the ground by businesses and investors and those who facilitate investment. And so, you know, at the AU summit in January, there was a call again to try to create a continent-wide free trade area. I think that's great. I think, you know, if you look at where the regional economic communities today on the continent, if you draw them out as I have, it resembles the classic Jagdish Bhagwati spaghetti bowl. Everything is overlapped because virtually every single country in Africa is a member of multiple regional trade associations. And when you talk to investors, as I have, they don't pay attention to these kinds of agreements because they're so spaghetti-like. So I think this goal of creating a single free trade area in Africa is great. But I think we're a long way from there. And I think that issue of regional integration, particularly in the context of infrastructure, is probably one of the key issues on the table.
Thank you very much, Harry. And I think both Clem and Harry underline that the diversity, the need to take each country as it is, its specificity, but at the same time, the need to link. And, you know, and the crucial economies of scale that can be gained by the linkages. So now we'll turn to the audience. Please ask your questions. We may take maybe 2 or 3 questions at a time rather than do it one by one. And please do identify yourself. Somebody will give you a mic. Yes?
Hello, my name's John Lyle. I'm working as a contractor in development assistance at the State Department. I think one of the questions that arises has to do with commanding the resources that are necessary to repay loans, in particular if the government is the borrower. The sense that some
Africa is at the dawn of an economic boom. Can it rise to become a major force in the global economy? It's one of the fastest growing regions of the developing world, but Africa faces big challenges on its way to arriving as a 21st century economic force. About half of the continent's 1 billion people live on only $1.25 a day. Drought and insufficient capacity continue to take a harsh toll on the region. Remarkably, the growth of Africa's economies has continued to outpace those of almost every other region in the world. Over the past decade, 6 of the world's 10 fastest growing economies were from Africa, and several of its largest countries will likely hit a 10% growth rate in 2012. Fueling this astonishing growth are high prices for African commodities like metals, minerals, and oil. They've driven a 200% increase in trade with the rest of the world since 2000. African trade with the BRIC countries, today at 20%, is expected to reach 50% by 2030. This seismic shift is changing Africans' lives. Small businesses in the commodity trade are fast becoming entrepreneurs. Cities are growing, but there's another major roadblock ahead. Currently, Africa spends $45 billion a year on infrastructure, but it's not enough. Only 1 in 3 rural Africans has access to an all-season road. Only 1/5 of people in sub-Saharan Africa can get electricity. Over the next decade, Africa will need to double its investment in power plants, roads, transportation services, and irrigation systems. It's a huge investment, but a huge opportunity. An investment that will help keep this new economic engine from sputtering and keep Africa on its promising course as a rising star of the world economy.
Please welcome President and CEO of GE Africa, Jay Ireland.
Good afternoon, everybody. Thanks for coming. I have an opportunity to introduce a distinguished panel, but you heard from the video, Africa is really a land of dichotomies. You've got tremendous growth potential, but at the same time, a lot of issues that you've got to overcome. I went to take this job about 8 months ago. I've been smitten and bitten with the bug. I think it's the best place from a standpoint of growth, not just for GE, but for many other companies and countries to invest in. So a couple of things, as you probably heard from the video and may know, the population in sub-Saharan Africa is going to grow from 800 million to 1.2 billion in the next 15 years. It's about a 6% GDP growth that's been estimated going forward. 200 million people will join the middle class. The need for power is enormous. There's 82 gigawatts on the continent today. The need going forward will go up to 450. And a lot of oil and natural gas and mining are going to drive a lot of that as you continue to see a lot of wealth from all of those. But on the other hand, they need infrastructure, huge needs. You heard $45 billion a year has been spent on infrastructure. They actually need 93 a year. So even though it's spending that, they need to spend twice as much. In energy, as I said, there's 82 gigawatts. 40 of that, half of the power that's generated is in South Africa with 40 million people. The other half is with the rest of Africa, it's 750 million people. The rail networks, it's going to take $3 billion just to reach operating conditions on existing networks. The fleet is over 25 years old throughout Africa. Most of it is very suboptimal from the way it works, so there's a lot of investment there. And then healthcare is going to be another big growth area from a standpoint of moving up the ladder away from which a lot of good work has been done in AIDS, diarrheal diseases, malaria, and now they're moving up into cancer, et cetera, the things that developed worlds are needing, but they need trained doctors, nurses, et cetera, as well as equipment. So there's a tremendous amount of healthcare needs as well. The key to all of this, though, is financing. There is nothing, as we look at it from a GE perspective, there's nothing that is a problem or an issue in Africa that our technology today doesn't serve. The issue that we have is pulling together the financing and the packaging, if you will, of what we can deliver to solve a lot of these infrastructure issues. So today the panel is going to talk about that. Quickly, we've got four great people. Number one is Mimi Alameyu, who was with the Executive Vice President of OPIC. She joined OPIC from the Africa Development Bank, where she served as the most senior official in Africa, pushing reforms and transparency at the bank. Harry Broadman, who is the Managing Director in PwC's advisory practice and serves as Chief Economist and leader of the Emerging Markets Governance and International Investment and Trade Practice Group. Can you fit all that on one card, I wonder? He has a long and distinguished career of service with the World Bank, USTR, White House, and the Senate. Clive Tasker from South Africa. He's a senior executive with Standard Bank, leading Standard Bank's relationships with the multinationals outside of Africa. And he was previously chief executive of Standard Bank Africa. And then finally, our moderator, Kemal Dervis, who is with the Brookings Institute, who's director of global economy and development there. He really focuses on emerging markets and development economics, where he brings a great wealth of experience. Prior to this, he was with the UN, World Bank, and a stint as a member of the Turkish Parliament. So I think he'll bring a great perspective as well. So thank you very much for attending and our panelists today. Enjoy the panel.
Well, it's great to be here and great to have all of you join us. Africa really, as we just heard, is now carrying a lot of promise. It was hard to believe 20 years ago, 30 years ago. I was, active in development for all my life, and it looked very tough. Per capita GDP was almost stagnant. There was always variation, of course, in some countries doing much better than others. But overall, the continent lagged behind other developing countries and seemed to not really to be getting anywhere. And this has changed quite dramatically. Late 1990s was, I think, the turning point. This last decade, despite all the problems in the world economy, growth rate has been slightly above 6%. And there's a lot of promise. I think there's a new sense of pragmatism also, of let's get things done in Africa, which impresses me quite a bit. But I will turn immediately to Mimi and ask you, from the point of view of OPIC, and particularly from the point of view of the topic, which is infrastructure, how does it look? The needs are huge. There's need for public-private partnerships, and I think this is what you're supporting most specifically. How do you assess what's going on, and how do you look into the future?
Sure. First of all, thank you for organizing this event. I'm always happy to talk about Africa, and particularly about what OPIC is doing in Africa. As some of you know, OPIC is the US government's development finance institution. It has been around for over 40 years, and it's not new to Africa. It's actually been investing in Africa since the early 70s. We currently have about 3.1 billion in our exposure. Last year, you'd be happy to know that a third of our investments were in sub-Saharan Africa. And 2 of our largest investments in Africa were actually alongside the African diaspora, which is something that I think a lot of people sort of are missing out on. And one of them with a Ghanaian American from Florida who saw an opportunity in Ghana, which is, as you know, growing, I think double digit with new resources. Another investor, a Nigerian American who invested in the recapitalization of Union Bank of Nigeria, one of the largest and oldest banks in Nigeria. And like some of you on this panel, we have quite a lot of products at OPIC, 3 main products that mitigate some of the risks that investors face in Africa. And our product is actually quite ideal for infrastructure. We have long tenure financing up to 20 years, and we can actually do up to 250 million in a single project. We also have political risk insurance, and I think a lot of donors and multilateral institutions, what I think they need to do is really come up with new innovative products. And one of the things that we've come up with recently is a regulatory product that can actually cover breach of a power purchase agreement, which is actually very, very necessary, and also change in feed-in tariffs, which protects investors. And also, as some of you may know, OPIC supported some of the earliest private equity funds investing in Africa. In fact, I think this started, in the previous administration, and we were very catalytic in creating some of the private equity funds that are now sort of on their 3rd fund. Helio, some of you may have heard, recently raised over $900 million to invest in sub-Saharan Africa, and they closed. And this is not just development finance institution money, as you've seen in the past in the earlier funds investing. Finally, you're starting to see real, pension funds, big states coming into this picture. Recently, I think Carlyle announced that it's also raising sort of a significant amount for Africa. For us at OPIC, I think with large infrastructure projects, because of our very progressive environmental, labor, and human rights policies, it's become more difficult. And some of you, Steve's looking at me, are much more aware of this. It's become more difficult for us to do big power projects, which is what Africa needs. I always say, if Africa could develop the Enga Dam, then you would light up literally half of the continent. So at OPIC, we're focused a lot more in the renewable sector, and we've actually been really, really successful. And you asked, your last question was about the public-private partnership. One of the largest deals we did last year was in Kenya, and with the geothermal deal, Ormats, for $310 million. And Kenya has very progressive laws that actually are attracting a lot of investment in the renewable resources. Kenya's power to geothermal energy is 10 to 15% of their overall capacity. In the last 7 years, they've doubled from 800 to 1,600 megawatts. Imagine the whole 40, 50 years since independence until 2003, Kenya had 800 megawatts, and in the last 7 years, they doubled it. So a lot has been going on, and I think a lot of it is happening because also African governments have reformed for the last 10 years. This growth that we're seeing didn't just happen overnight. There's been a lot of really good macroeconomic reforms taking place, and even during the credit crunch and during the crisis, these governments didn't stop with these reforms. And also, I think one thing that always gets overlooked, I think, is the level of fiscal space that debt relief gave African governments. So for the first time, they were able to start investing a lot more in their own infrastructure, in their own economy. And you're starting to see that in the private equity world. South Africa invests a significant amount of its own pension fund in its own infrastructure. And you're starting to see that in Kenya and other places. In addition to OPIC, of course, I think we talk about that maybe later on. There's a lot of other investors from China, from Russia, Brazil, Turkey, we were just talking, is really active throughout the continent, which I think is a good thing for African countries to have options because they also have really aggressive plans. Our job, I think, at OPIC is actually quite a lot easier. I think emerging markets is where the growth is. I mean, you're not going to see the double-digit growth in the developed world, that's for sure. And Africa, believe it or not, the last 10 years has had the most impressive growth. And when I talk to the infrastructure team within OPIC about the places where they're really excited to do work, and it's Africa, because if you talk to our clients, they're there because they're making money. And there's nothing like a really good exit strategy and showing that you're making double-digit returns to encourage more investments. I'll stop there.
Thank you very much. Well, that was both very comprehensive and very encouraging. And I think that what you said about private equity, the fact that the investors are coming in that way, is also very new. I mean, beyond the IFC-type public organizations, and shows that there's a lot of confidence spreading through the private sector now. Now, Clive, in terms of the financial sector, banking, the whole financing mechanisms for all of this, what's happening, and how do the constraints in the banking sector worldwide impact Africa, or don't they impact at all? The financial sector is one of the big topics in the whole world. If you could tell us a little bit about that, it would be wonderful.
Certainly. Good afternoon, everyone. It's a great honor and a pleasure to be here with you this afternoon. And I bring you greetings from Johannesburg, where Standard Bank is based and has operated for the last 150 years. And our job, as we see it, is connecting Africa to the world and the world to Africa. We are Africa's largest bank. We have a market capitalization of just south of $30 billion. We employ 53,000 people, and we operate in 30 countries around the world, 17 of which being in Africa. And our home base is fairly and squarely South Africa. We have a strong focus on sub-Saharan Africa. And it's with interest that one plans and reads for discussions and presentations like this. And we are firm believers that the mindset of the investor with respect to Africa has changed and needs to change further. And I think it's perhaps best illustrated by the Economist magazine. And Zanny was talking to us at lunch. And in May of the year 2000, the Economist magazine produced an edition, one of its normal bi-weekly editions, and the cover was a cutout of the African continent with a young freedom fighter with an RPG rocket launcher on his shoulder. And the headline on the cover was The Hopeless Continent. 2 weeks before Christmas in 2011, about 2 months ago, the Economist produced another issue of their magazine. And on the cover was a lovely photograph of a child flying a kite. And the cover on that issue was Africa Rising. And I think that's fundamental to the view that investors have on Africa. And I must be honest to say that in more of the western parts of the developed world, that view seems to be lagging a bit. And I think Africa's ability to show investors real returns on investments is there. And Africa has moved out of the category of being the victim, beneficiary, or destination for only development type aid and development type funding. We have been party to a number of projects and financial structures where basically we have attracted both public and private money on the basis of a return of investment. We are certainly seeing that as being realized by many of the players from the BRICS countries, Brazil, Russia, India, China, and now South Africa, providing the S to that. As well as countries further east, like Southeast Asia, etc. So those returns are there, and there is no shortage, in our experience, of the African financial and banking sector of liquidity or capital. Certainly, the global financial crisis had an effect on African institutions and African banks, but more of a peripheral effect because it affected the export markets for many of the players in the African economies. So certainly the major South African banks are in a liquidity and capital strength position as good as it was in 2006, 2007. Our bank, Standard Bank, has as its largest single shareholder Industrial and Corporate Commercial Bank of China, which is the largest bank in the world. They own 20% of us. So there is certainly an ability to raise capital there. And we have put together, certainly in the last number of years, big infrastructure projects, and I can mention two here specifically, one being the Morupuli power station in Botswana, where we raised $1.8 billion US, and at tenor or length of financing at 15 years, which has hitherto been unknown or unheard of on the African continent. And then with a consortium of Brazilian major multinationals like Vale, Odebrecht, and Correa, 1.8 billion funding of a new massive gas and coal fields in the Tete province in Mozambique. So I think the common held perception that financing is problematic in Africa is one that we need to deal with and really deal with head on. We have in the last while been lead arrangers in 6 out of 7 sovereign bonds that have been issued by African governments. There's a strong appetite for that African risk, even amongst European and Western investors. So I think the capacity is there. One of the mistakes, I think, that people who look at Africa and don't know her well enough, one of the mistakes they make is to view it as this unit, this homogeneous, heterogeneous thing. There is really no such thing as Africa. And if you take a paintbrush and go Cairo to Cape Town, and this is how I'm going to approach the opportunity, that is not really the way to go about it. So the individual economic scenarios, the interest rates, the rates of inflation, the foreign currency rates in Rwanda, Namibia, Nigeria, and Kenya are as different as the weather is from Alaska to Hawaii and Miami. And I think it's important for investors to understand and almost prioritize and categorize that, because properly put together projects, properly put together business initiatives will certainly find the financing.
Thank you very much. Just a quick follow-up on that, because I remember when I was at the World Bank, it was an issue we had to deal with sometimes. I think you're totally right. There's huge diversity. But at the same time, some projects, some infrastructure, need a multi-country approach.
Correct.
And is there any progress in kind of the ability to structure these projects?
Yes, there is. And one of the challenges that I think is getting a lot of attention at the moment is the whole question of regional integration, because the level of intra-African trade and commercial flows is at a woeful figure of about 10%, according to the African Development Bank. So most of Africa's commercial activity and exports is exported to countries outside of Africa. That regional trade and the regional integration certainly needs to and relies on a degree of regional infrastructure, and that needs to be developed. So certainly the point that you make is absolutely a valid one. East Africa, in the form of Kenya, Uganda, Rwanda, Malawi, Tanzania, are probably closer than any other region in putting together some structured form of regional integration. And until recently, there was a cry coming out of North Africa, out of Libya specifically, that situation has changed dramatically for one type of United African States, one currency, etc. We're not quite sure whether that will happen in the foreseeable future. It may be a pipe dream, but certainly this regional integration is a key, these clusters. And one can quite easily look, if you understand the basis of some of these economies, the geographical clustering, and foresee an East African, a West African, and a Southern African type of economic cluster.
Thanks a lot. Harry, Mimi said at some point in her presentation that policies had improved a lot. And of course, policies are critical to success everywhere in the world, including the kind of policy infrastructure, the transparency, the reliability. There are problems everywhere in the world, even in the advanced countries on this front. and Africa has been an area where these problems were particularly acute in the past. But I think things are improving on the policy front and on the whole kind of software of development. And I think you're involved in that and helping on that front. Could you share your perspective on that and your other experiences?
Sure, thanks Kamal, and thanks for inviting me, GE, to participate in this. I want to echo one thing that Clive finished off on, which I often use as my first point about when I'm discussing Africa, and that is Africa is not a monolith. It's not a unit of analysis. And I think for all of us up here, we're using Africa here as a shorthand, that they are, sub-Saharan Africa, if you use the World Bank lingo, which Kamal and I are used to doing, it's 47 countries, now 48. But I think that's a really important point, that every time we talk about Africa, it's really a simplistic notion. I think another issue that comes to mind in the area of governance and policy, there's no question that the reason that the economies of most African countries were so resilient during the financial and economic crisis starting in 2008, 2009 is because there were hard-won reforms that were put in place, particularly on the economic side and to some extent in the institutional and the governance side. We certainly see, although there are exceptions as there are in any continent, tremendous improvements in the electoral process across the continent. Are we there yet? Absolutely not. But I think, one cannot deny that there's a direct linkage between the policy making that has taken place and the economic growth that has engendered. It's not been commodity prices. It's not been simply the southern investors like the Chinese or the Indians making that difference. It's because of hard-won fights on the continent itself. Having said that, I think there still is a gross misperception about most African countries. I call it the continent of economic misperceptions, where risks in Africa generally are highly overstated and the investment opportunities are highly understated. That's not the case everywhere in the continent, but a vast majority of the countries, I think that's quite true. One of the things that has been happening, in part more because of southern investors like the Chinese, like the Brazilians, like the Indians, has been that Africa has begun to integrate internationally. And so there's more competition. They are entering, some of the African firms, by dint of southern trade and investment, are beginning to get involved in network trade. And this is engendering competition, more efficiency, climbing the value chain on the continent than otherwise would be the case. And as a result of this new investment, this new trade, this new integration internationally, as has been the case in other emerging markets over centuries, is that this is forcing African civil society, it's forcing African governments, it's forcing African consumers, African businesses to really come under pressure to figure out how are they going to compete even more so, not just with other regions of the world, but among themselves. And so what we're seeing in Africa is much like what I used to see when I was working intensively in China, is you're beginning to see competition among the states in terms of policies. Presidents, prime ministers like to hear of really good stories, robust stories of what worked, in a Tanzania. Gee, can that work, in a Ghana? And they are keeping an eye on each other. And I think that kind of competition is engendering, some degree of improvement in the governance and policy environment. I think, in the context of infrastructure, I think this question of regional integration is so paramount because, as we know, Africa as a continent is cursed by the fact that it is comprised of a large number of small countries. And when that happens, like in other regions of the world, we have to create synthetically large markets so that investors can, whether they're African or not, can yield economies of scale. And what that means is, in terms of the governance arena, particularly in infrastructure where you need to have these interconnections, is how to get the governments to work together so that they can, in tandem, attract the kinds of large-scale investments that investors are going to make because that's the way they make their returns. And I think, this issue of regional integration, with those of us who've been working in Africa for years have been harping on, I think is still the goal. I think it's a laudatory goal, but it's going to take a lot of effort on the part of Africans, on the part of the international community, and frankly, through public-private partnerships on the ground by businesses and investors and those who facilitate investment. And so, at the AU summit in January, there was a call again to try to create a continent-wide free trade area. I think that's great. I think, if you look at where the regional economic communities today on the continent, if you draw them out as I have, it resembles the classic Jagdish Bhagwati spaghetti bowl. Everything is overlapped because virtually every single country in Africa is a member of multiple regional trade associations. And when you talk to investors, as I have, they don't pay attention to these kinds of agreements because they're so spaghetti-like. So I think this goal of creating a single free trade area in Africa is great. But I think we're a long way from there. And I think that issue of regional integration, particularly in the context of infrastructure, is probably one of the key issues on the table.
Thank you very much, Harry. And I think both Clem and Harry underline that the diversity, the need to take each country as it is, its specificity, but at the same time, the need to link. And, and the crucial economies of scale that can be gained by the linkages. So now we'll turn to the audience. Please ask your questions. We may take maybe 2 or 3 questions at a time rather than do it one by one. And please do identify yourself. Somebody will give you a mic. Yes?
Hello, my name's John Lyle. I'm working as a contractor in development assistance at the State Department. I think one of the questions that arises has to do with commanding the resources that are necessary to repay loans, in particular if the government is the borrower. The sense that some observers have is that the corruption is of a scale and the inefficiency in administration is of a scale, in certain countries at least, to raise questions about their long-term ability to gain control enough of the result, to be stolen before they got them. It just doesn't, that's the impression that's created when you are, observing but not dealing with it quite so directly. So I have a question. Who's the borrower? How does he get the resources to repay the loans and the like?
All right. Any other question? Yes?
I'm Bob Hershey. I'm a consultant. To what extent are you able to use the internet to try and bring some of these ventures together and get transparency?
All right. Be great to have another question. Third one, yes?
Hi, my name is Roger Berry. I'm with an investor group that founded a company that's in mass-produced housing.
Mass-produced housing.
Housing. And there's a tremendous housing deficit in Africa. Africa is an important market for us. And a lot of these projects involve 10,000 type tranches of houses with purchase agreements on the back end, but curious about whether Standard Bank or OPIC or others are involved in investing in those type of projects.
All right. Well, maybe we'll take these 3 questions and then we'll have another round. Mimi, do you want to start?
Sure.
Maybe.
Sure, I can start. First question, I think, was in terms of the borrower. Are they paying? Our clients tend to be, it's all the private sector. Our loans actually dollar denominated, and we get paid, or our loans are on commercial terms. OPIC has made money 34 years in a row, so we're quite profitable. And the second question, about the use of internet, I know there's sort of a new venture that the African Development Bank is looking at called Zambato, which is a web-based platform to sort of kind of be the marketplace for investors looking for infrastructure deals that are sort of packaged well and been vetted well. So it's kind of in an early stage. OPIC is actually also looking at that deal. It's in our pipeline. And the third question about housing, OPIC actually has a pretty significant housing portfolio in Africa, and would be very interested in looking at it. Come talk to us.
Clive, you want?
Yes, thanks, Kamal. I'll start with the last question, because we certainly are involved in funding housing on an individual basis, your typical mortgage type product, but we're also involved in the funding of development and developers, and we have done some in partnership with OPIC. We were involved in a specific project in Zambia, Lalai, Houses for Africa, and we're certainly open to and welcome the opportunity to look at such developments. The question of the internet, I think you answered that. I was just looking at an interesting statistic in that the number of internet users in Africa has increased over the 10 years up to 2011 by 2,600%, as against a world average of 480%. So there has been significant growth, and that will continue to grow and have a major impact. The whole area of communications generally has increased the commercial viability of many of what Africa does and trades, especially in the agricultural sector. So you could imagine a group of small growers reasonably remote from the market in a city, waiting for a runner or something to get back over a number of days and say the price of corn is now this. With mobile telephony, it's instantaneous. So you've got the Chicago Board of Trade sitting in Juba, if you will, with direct contact through mobile telephony. The question of who the borrower is and the repayment track record really has never been an issue for us. We have found most acceptable repayment and bad debt or default statistics across many countries, both in the large government and corporate sector, but also typically in the retail or individual sector. And here, just I think very interesting, if you can indulge me for 90 seconds, we hooked up with a unit at Harvard University known as Emerging Financial Laboratories, who have, through years of study, come up with a theory that says a person's ability to repay a bank loan does not depend on whether they've had a bank account for 15 years or have been employed by the same company. It's about whether they're a good or bad person. And they've developed a type of psychometric test, which we have now piloted in 6 countries. And you sit the customer down, and it takes 30 to 35 minutes, and you go through the psychometric test and ask the individual some questions. That then gets sent electronically in a nanosecond to Boston. They score it, they send it back and say, you can lend this person unsecured money. And in all of the test countries, our allowable or budgeted default rates have been dramatically improved. So if we thought we'd have a non-performing loan of 6% of the book, it's been 3.5%. So it, in a way, speaks to some of the value system and cultural, ethical system that exists in many of these communities that sometimes we unsighted on.
Wow, I mean, just to listen to what Clive was saying about what is being done in Harvard puts people like me out of business very quickly, since I'm worried about how to mitigate risks, and they can do this in a nanosecond. I want to see the track record for that on the upside. You know, on the question of governance and corruption, regardless of who the borrower is, I want to go back to the theme that I was enunciating. And I work all over the world, and I have been in emerging markets for about 30 years. You know, there's a risk of corruption in Africa, just as there is a risk of corruption in the former Soviet Union, in Latin America, and Asia. And I think it's time that we stop thinking that what is happening in Africa is unique to Africa. It's not. Africans respond to market incentives. They respond to quality goods and services and are willing to pay high prices. So I think that's a really important notion to get out, that when we think about the governance risks in Africa, if you control for all other kinds of characteristics, they're no greater or no lower than they are against other emerging markets. On the internet, you know, the mobile money is a classic case of where Africans generally, because they don't have the legacy terrestrial assets that we have, are able to use new technologies like the internet, again, speaking to this question of regional integration, are able to get across economic spaces, much more efficiently, frankly, than they had before, and frankly, more efficiently than we can do. And you watch 10 years, 15 years from now, this will be the story that will be retold over and over again. And on housing, I know that the Standard and other banks on the continent are doing a really robust job of trying to get into that market, and that market's going to grow only faster because of the burgeoning middle class. And I'm not talking about just South Africa at all. In fact, quite the contrary. I would talk about countries like Kenya, or Rwanda, or Ghana, or Mozambique. You are seeing thriving middle class customers emerging at an exponential rate on this continent. And housing is going to be one of those sectors that will benefit, along with consumer goods, will be one of those sectors that will benefit from that.
Yes?
Hi, Tony Carroll with Manchester Trade, and I'm a lecturer at Johns Hopkins University. There are differences in Africa, not only at the national level, but at the local level. I think there's evidence now to suggest that certain cities, municipalities, local governments might be able to, in effect, take on risk for the development of their infrastructure needs, whether they be power plants, water treatment plants, even educational infrastructure. To date, at least in the most part of Africa, this hasn't developed. In this country, however, much of the infrastructure was built at the local, county, and levels. I'm wondering if you see a trend where there might be a differentiation of risk, public risk, if you would, at the municipal, county, or government level in the near future.
Thank you. Yes, the gentleman here.
Chris Kane with Mercator 21. There's a wave of investment being put in electricity grids around the world. I'd be interested in the panel's views on which countries in Africa you see as being the most robust and fertile environments for investment in the electricity grid.
Yes, in the first row here.
Dovetailing on the question 2 ago, Bronson Lee with GE Energy, it strikes me also that the subnational level is where some of the most opportunities are. And I'm interested to see, appreciated your comments on innovation and financial models, interested to see what sort of public-private partnerships have you seen that have been innovative at the subnational levels.
All right, we'll take one round and then we'll come. Maybe we'll start with Harry this time.
Sure, I think, in answer to Tony's question and this gentleman's question about the subnational level, I'm not sure whether only but the largest cities in Africa, which are then still very small relative to large cities elsewhere in the world, just by dint of where Africa is, those large cities probably will be in a position at some point relatively soon to begin to be the ultimate borrowers. But I think that's really rare at this juncture. But the play really is subnational nonetheless, more generally. And whether you're talking about the large countries like in Nigeria or South Africa or in Angola, the public-private partnerships, frankly, that have to be struck are going to be struck much more efficiently with the governors and at the local level. And that's where the rubber is going to meet and does meet the road. In terms of electrical prospects, my God, the sky's the limit. The demand exceeds supply all throughout the continent. I'm probably the least informed, at least sitting in the crowd of GE, to say where the prospects are greatest. But the gap, the infrastructure gap in Africa in electric power and other things is just endless.
Thank you. On the subnational or local level, I absolutely agree with what Harry had to say. I think it's certainly too early. We're not really seeing much of it, but it gives us an ability to zone in and drill down deep and therefore better understand the risk. So there have been some examples of that. The Lekki Toll Road in Lagos is an example. We will look for more and more of those because in a way it's containable, it's more manageable, it's a well-packaged product. We can get our mind around something like that quite a lot easier than something that happens on too much of an esoteric, if you will, or national level. So we would certainly encourage that. On the power question, it's a fascinating question, and one of the issues that we are seeing occurring time and time again is the debate between those who are seeking clean and renewable energy at all costs and those that are seeking to install something that would use fossil fuel or coal because it's there. Typically, the difference in the capital expenditure is quite significant. And I think a pragmatic approach probably makes sense because Africa is blessed with some of these mineral resources and an ability to use that to generate power. Certainly, the question of renewables is the sexiest game in town at the moment. Everyone wants to do it. But by the same token, I think African institutions and governments need to be sensitive to the overall global requirement to produce cleaner and cleaner energy. But it's, again, that balance between what you can do in the short term, what you can do with available resources, as opposed to the longer term desire for cleaner energy. So I think those countries with ability to bring on large hydropower schemes, we've seen that in Mozambique, etc., I would suggest that those, and there are many of them, with the big rivers, the Congo, the Volta, etc., would present some good opportunities.
Mimi?
Yeah, sure. On the financial models, we're looking at a variety of sort of local currency financing options, which I think for large infrastructure projects, particularly in Africa, because our loans are in dollars, could be sort of challenging for our sponsors.
We can hedge. We can hedge.
You can hedge us, yes, which we work with.
How many years?
I think she needs this test first.
But one thing that actually we haven't touched on is another level of funding, which is sort of early stage project preparation, technical sort of assistance, or capacity, whatever you call it. There isn't quite a lot of it out there for large infrastructure projects, and it's really, really needed. And my favorite example is the Turkana Wind in Kenya, which received I believe it was USAID grant funding early stage for project preparation. Then it got private equity fund investment. And then, believe it or not, the DFIs, the development finance institutions, came third at that stage. And then it was very bankable, so the commercial banks are all kind of tripping each other to get into the deal. And I think a lot of large infrastructure projects, the kinds that could really, really make transformational changes in the continent, like the Inga Dam, would need something like that. So.
Thank you. There was one question. I think we may have chance for two more questions. Gentleman here, and then you over there.
Thank you. I'm with the Embassy of Malawi. My question is more related to the diaspora. I think Mimi had touched on it. Do you have any specific initiatives at OPEC in which we can maybe send this information over to our diaspora in the U.S. community here? Yeah,
sure. I mean, the State Department, as you know, has a whole sort of diaspora initiative, just because I think it just a chance and an opportunity to push on something that's already happening. I think a lot of people think of sort of the African diaspora as sort of wiring money to their, grandmother, which I used to do as well. But but it's not that anymore. I think they are starting to make really long-term investments, and the investments I talked about earlier, like with the Nigerian American, sort of lining up some really impressive institutional investors to sort of take over the Union Bank of Nigeria. This is somebody who's a Goldman Sachs partner, really educated, had a lot of, very successful career here, sees an opportunity in the country, and they're usually, even with the Arab Spring, we saw that the first early investors who are sort of interested in going back to Tunisia and Egypt to test the waters tend to be the diaspora, because they understand, I think, the risk better, and they're usually sort of have a much long-term approach, and they're not going to run at the first sort of problems that, and they can also sort of mitigate, I think, the risk a lot of times. So, but to answer your question, we did support a Caribbean-based diaspora program where OPIC is willing to support up to $50 million to entrepreneurs investing in the Caribbean region. And there's another one for Latin America we're hoping the State Department will do, I think, a similar thing for Africa as well. But also what we did this past year is actually sort of streamline some of our policies, like the SBA, for example, allows green card holders to qualify for their programs, and OPIC just sort of aligned its requirement program, so we're in line with EXIM and SBA and others. So even green card holders can qualify for some of the OPIC products, and I think that sort of broadened, our pool of clients.
Last question.
My name's Aubrey Ruby with the Whitaker Group, and I wanted to build off of something Mimi said in her kind of opening, which was that debt relief gave African governments fiscal space, and that's been overlooked. My question comes out of that question: how can African governments find more money for infrastructure? It's a need across the board. And what are the innovative approaches you're seeing at a governmental level for financing infrastructure? There's been a wave of eliminating subsidies across the continent, as many of us have seen in the last 6 months, and that's opened some fiscal space. But what do you see as the trend line for governments being able to pay for very ambitious projects, like, say, the LAPSET project in northern Kenya, or South Sudan pipeline, these kind of things? How are they going to get paid for?
Well, we're kind of running out of time, but very quickly, maybe.
I think the way I would answer that, some of the ask can't be all also, I think, on the African governments. I think there's a lot to be done on the donor side as well. I think we need to sort of streamline our own financing. We don't have equity authority, for example, so we try to work with the IFC and others, and I think we need to sort of collaborate more on the donor side.
Any quick?
Yeah, I think, government has the ability to use what might be considered limited financial resources to leverage investment out of the private sector specifically. So, to give an example, Nigeria have announced a scheme in terms of which the central bank has committed $800 million and charged the commercial banks to leverage at a ratio of 6:1 to lend to smallholder farmers. So essentially liberating $5 billion into a market that otherwise didn't exist. And that type of model certainly has application in wider, like, infrastructure projects, etc. We're seeing in the public-private partnership space build, operate, transfer facilities and agreements coming to the fore again. Those will be popular. And I think the key is, how can government leverage whatever they have using the expertise, innovation of the private sector to make these investments?
Harry, one last word?
Yeah, very, very quick. I think there are a multitude of creative ways on the continent to structure public-private partnerships that are, frankly, a little bit out of the box than what traditionally has been the case. And I know that some companies that I'm working with are establishing business-to-business agreements, business-to-government agreements, in order to create the space for governments to participate, drawing on the revenues that they're going to get over time from natural resources. And there are certain ways of crafting those public-private partnerships that I think will create the opportunity for governments actually to be more significant borrowers, as long as it's done prudently, under the kinds of risk mitigation procedures that you would like, so that the governments do not end up in the same place as they were in the last 2 decades.
Well, thank you very much. We have to draw to a close now. I think it's been an excellent discussion with wonderful panelists and great participation. My own last word is, I think, who knows, it will take time, but we are in an age of convergence now, not divergence anymore. At the beginning of the 19th century, the 20 poorest regions or countries of the world, their income compared to the richest, the ratio was 3:1, which wasn't that much. And then there have been basically 2 centuries of divergence. I think colonialism had a lot to do with it, other things had a lot to do with it. And we reached a point in the 50s and 60s where the ratio of the richest 20 places in the world, because countries shift borders, compared to the 20 poorest, went 50:1, from 3:1, 50:1. And I think since the 1990s, you know, a new historical phenomenon is showing itself all over the world. Humanity coming together, a convergence process. Not everywhere, there are still huge differences, but broadly speaking, I think technology, information, better policies, foreign investment, the internet, the ease of communication, all these things are bringing the world closer together. That doesn't mean that, you know, the future will be without problems. It doesn't mean, in my view, the kind of end of history a la Fukuyama. I think there'll be lots of problems, and this whole process has to be managed. But I do believe, and I think we talked about Africa, but we could talk about India, about Latin America, this phenomenon of having kind of one world, you know, one interconnected world where opportunities are there for everyone, and hopefully freedom is also there for everyone. I think this is a historical phase. I think Africa in the 90s still looked a little bit apart from that, but it's very much part of it now. Very, very much part of that process of convergence. And there are real returns to be made. You know, I mean, the private sector is the driving force. It has to be complemented by good policies. It has to be complemented by transparency, as all the speakers emphasized. And I think there's still an important role to be played by the development banks. But this process is now underway, and I think it should be a great source of pride for Africa and for all of Africa's friends. I want to end by thanking GE for organizing this wonderful event, for being a player in Africa. Jay Ireland, I think, said in the beginning, you know, how much he felt at home now, and I think that's wonderful. And want to thank all of you, the audience, for being here and making this discussion possible. Thank you very much, and I think we'll have a word from John.
Thank you very much.
Ladies and gentlemen, please welcome the Vice Chairman, President, and CEO of Global Growth and Operations for GE, John Rice.
Well, thank you very much, and Kamal, thanks to you and the panelists for educating us for the last hour or so. And I want to pick up on the word that you used in your concluding remarks, convergence, because for us, it is all about convergence and interdependencies, and we've been really talking about it all week, whether you want to think about it in terms of the environment or geopolitics or financial institutions and financial services, job creation or innovation. That just isn't anything that happens under those headings that doesn't involve multiple people in multiple places around the world. And that's the world we've come to know and try to figure out. And I think it's the world that we've all been exposed to this week. The moral of the story for us is that we can compete, and we've been trying to provide examples of that every step of the way. And we're trying to figure out how else we need to do it, and how we can get better. But we need some things, right? We need a level playing field. So we need smart tax policy. We need free trade. We need, while we need free trade agreements like the 3 that were negotiated last year, we need to do them faster, because while those were being debated, there were dozens and dozens of other bilateral trade agreements that were happening around the United States. So this is going to happen whether the U.S. chooses to participate or not. Sensible policies on tax, the U.S. EXIM, we've talked about that. The smartest thing we could do is reauthorize it, expand the capacity, and ideally reduce a little bit of the U.S. content. But just do smart, sensible things. We've got to learn how to talk about this a little bit more effectively so that we could walk out that door, grab somebody off the street, and ask him or her what they thought about global trade, and it would be positive, not negative, because not enough people think about it in a positive context. And we've got to, Harry talked about accepting risk, right? There is cyber terrorism risk in lots of places. There's corruption risk in lots of places. People, as I talked about earlier today, talk about the risk of doing business in China, and I talk about the risk of not doing business in China. There is risk everywhere you go. Our shareholders aren't asking us to operate in a risk-free environment. They want us to take smart risks and get paid for those risks. And that's what we have to figure out how to do in 120 countries around the world. But it's not about no risk, because I don't really know of any business that is risk-free. At least, maybe we got a smart panel up here. Maybe they can educate me. Then all this adds up to the will to compete, right? We can compete. We're showing that every day. Do we have the will to compete? And do we have the willingness to do what it takes to educate people, to give them opportunities, the will and the willingness to do what it takes to compete effectively and get up every day figuring out how you're going to be better than you were the day before? And our bet is that you can do that in the United States and frankly in other places if you have the right people and you've given them the opportunity to do what they need to do. So thank you for joining us. This has been a great day for us. You're all invited to a reception that we're going to have in this room starting at 6:30 this evening. And we appreciate your participation, the quality of your questions and interaction, and the help you've given us in terms of helping our journey forward from this point. Thanks a lot. To compete, and do we have the willingness to do what it takes to educate people, to give them opportunities, the will and the willingness to do what it takes to compete effectively and get up every day figuring out how you're going to be better than you were the day before? And our bet is that you can do that in the United States and frankly in other places if you have the right people and you've given them the opportunity to do what they need to do. So thank you for joining us. This has been a great day for us. You're all invited to a reception that we're going to have in this room starting at 6:30 this evening. And we appreciate your participation, the quality of your questions and interaction, and the help you've given us in terms of helping our journey forward from this point. Thanks a lot. Hi.